Case-Shiller Market Predictions. Brought to you by Platinum Properties Investor Network.
Minneapolis, Minnesota, negative 10% return on investment, 2011. Market values in Minneapolis grew significantly from 2000 to 2005 and then declined slightly until a larger correction was created by the 2008 financial crisis. In 2009, values appeared to stabilize, but then went through up and down swings as foreclosures came onto the market and pulled the prices back down. The market is beginning to show signs of stabilization, but the regression back to fundamentals is likely to take a bit longer than many had anticipated. Currently, approximately 54% of real estate listings in Minneapolis are from foreclosures. One of the effects emerging in 2010 that we've seen in Minneapolis is pricing pressure, as banks continue to bleed off their inventory of foreclosed properties and values regress toward a more linear long-term trajectory. Our models estimate that this effect will continue to place pressure on prices in Minneapolis, resulting in a value bottom that takes a bit longer to establish than in some of the other market areas. Population in the city has remained relatively flat throughout the last 10 years. The city represents an important area of commerce in the northern Midwest, but is not a focal point of in-migration and population growth that are typical of vibrant investment markets. Investors in Minneapolis will be challenged to generate attractive rates of return, since the market rents are not expected to be significantly large to cover operating expenses and mortgage payments for properties in the area. This means that investor returns will be dependent on realizing value appreciation and then selling to compensate for the accumulated negative cash flow. Since the expected negative cash flows must be financed out of pocket until an investment property can be sold, and since the proceeds of that sale must be sufficiently large to offset the cumulative negative cash flows, we do not recommend Minneapolis as a focus point for income property investment. Now let's look at the ROI build graph for Minneapolis as we predict the following multidimensional return on investment. Negative 0.2% depreciation, negative 0.8% ROI loss from leverage, and negative 9% ROI loss from cash flow, for an overall total ROI estimate of negative 10%.
Brought to you by Jason Hartman and Platinum Properties Investor Network, Inc. For more information, go to www.jasonhartman.com or call 714-820-4200.